we have a very special guest joining us who will share his views on the market and let us know what he thinks of the market right now. Mr. Mohit Gang, co-founder and CEO of Moneyfront. Sir, thank you for joining us, here on News 9. And in the last couple of weeks, we have sort of witnessed decoupling from global markets, and the focus overall has shifted to Lok Sabha elections. My question to you is what happens if there is a major surprise on the counting day, both on the positive and the negative side? Let's say in scenario 1, NDA's final tally crosses 400 mark, which the market was, by the way, factoring in back in December, during the after the 2023 state elections. Or scenario 2, the tally is much below expectations, under or around that 300 mark. What sort of a percentage impact can we see in each of these events?
All right. Thank you so much, Suyash. Always a pleasure to be on your show. Look, I think both the scenarios, honestly, for the market, seem a little improbable as of now. I think one is tally crossing over the 400 mark kind of a thing, though I'm not a political expert. Let me just disclaim it out on the show. And obviously, no one knows what the final outcome will be. But if the NDA tally at all crosses the 400 mark, I think there'll be one kind of a feat, and market will take it extremely buoyantly, right? Because I think, look, from a market's perspective, markets like stability, markets like continuity of policies, markets don't like any surprises. And typically, what happens is around the election time, if you are not sure who is forming the next government, then markets are in a tizzy about the next policy move, right? What will be the policy like? Will the India manufacturing push continue? Will the India plus one narrative continue? Will the policy rates, to some extent, the government does influence the central bank's outcomes also, and the overall the host of taxation things and everything, they all go into a tizzy, right? And when you have a bit of a certainty that yes, there will be a stable government ahead. Stability means on two counts. Number one, the party who was ruling or who was running the government continues to run, and second is the numbers are such that they are not hindered through the process of next 5 years, right? So on both these counts, if you have some amount of certainty, which I think markets are now sniffing, basically, and which is when the markets have also started picking up a little, though markets might continue to be a little sideways for next 10-15 days, because till the final outcome is out, you never know which way the tide swings. But my sense is on both the extremes, it seems a little improbable. But if any extreme happens, if let's say the number falls below the 300 mark, then also it'll be a great surprise for the market. And my sense is markets might not react very kindly to it.
Markets might not react very kindly if the number does fall below the 300 mark, but I think looking at it, improbable figure could only perhaps move the market, because the markets have sort of recalibrated, and as a expectation of the majority has gotten thinner and thinner, the course of last 4-5 months, from the state election victory to now. But election aside, we are also in the midst of the fourth quarter earnings season, and one theme particularly that stood out for me, sir, in Q4 was that rural demand, or at least companies that are focused on rural India, they have reported very strong numbers, and they have also in their management commentary said that they are seeing some green shoots of recovery in the rural sector. In fact, rural India has in the previous quarter outperformed urban consumption as well. I mean, because we know that rural India, rural demand, rural consumption had been a pain point for us, and that is on the mend now. Is this a focus area, or is this could be the focus area for the next 12 months? Because the stocks pretty much have done nothing, they have been underperformers, and also the expectation is that the monsoon is going to be normal this time around as well. Mohit, your take.
All right. So look, I think, Suyash, there have been two parts which I've been voicing out on your shows previously also. One is rural demand and second is private capex. My sense is both these cycles are long overdue and will pick up in the country in the coming 6 months to a year kind of a period. Because we are talking of the rural demand, I think there are a number of factors which are boosting it. Obviously, the indicators are very sharp from the ground. The two-wheeler sales are hitting record highs, which is a very good indicator of rural demand. The tractor sales have not yet picked up so much, but my sense is it should pick up. Around the election time, the amount estimated to be spent in the economy is to the tune of almost 1 lakh crores, right? and that in itself will boost a lot of demand on the ground. I was other day reading a report from SBI, and it mentioned a very interesting fact, which says that a lot of this rural demand, because of better connectivity, better highways, better roads, is also migrating to the urban areas because the rural people are now traveling to nearby towns and areas, and the demand is migrating out there. So that could also be a factor when we assess the rural demand. Having said which, my sense is a good monsoon, which is the prediction this year, some amount of private capex picking up, and overall the green shoots from both the FMCG companies also. Even in the FMCG pack, if we see, the rural demand is almost coming back to the pre-COVID levels now. So my sense is all this combined should give a real boost to the rural economy in coming 3 to 6 months.
Good morning, Mohit. Now, Finance Minister Ms. Nirmala Sitharaman expressed her concern with the growing FNO trading in India. Now, NSE constituted 75% of FNO trades in 2024. It was only 12% back in 2014. Compared to global FNO trades, NSE constituted 85%, up from 67%. What is the real concern according to you? Is it household savings that get depleted because of this? What is the real concern, and why is the finance minister worried?
Amit, I think, look, I would not be the right person to voice out what the real concern out here is. But to my sense, FNO is all good till such time that it is done methodically in a systemic manner for hedging purposes, and right, and that's the worldwide usage. And these volumes will pick up as India becomes a better economy. As you see, look how many demat accounts holders do we have? 15 crore, right? In a population of almost 150 odd crores. So this number is going to go surge many, many times more, and we have to be prepared as a country to handle that number. Perhaps the regulatory framework has to be more strengthened around it, and you have to kind of curb some malpractices around it. My issue and worry is only on two counts. Number one, the number of young Indian population who's taking it up as a fad or taking it up as a vocation, and thinking that perhaps this is one easy money on the table, and not wanting to go into formal jobs. Look, I've done many college sessions, and I teach in few colleges also. And when I go there, I kind of get this undercurrent that people don't want to work any longer. They just want to be stock traders, right? And they don't realize the downside of it because they haven't seen a meaningful downside in last 2, 3, 4, 5 years, perhaps, right? So my sense is some healthy market corrections perhaps might ease off this froth a little, and young India has to be educated and trained enough to understand the risks associated with both futures and options, because these are highly risky instruments, could be perhaps weapons of mass destruction, as we all know, if not handled very carefully, right? So that's my only worry, but I think the volumes will keep surging. Amit, you and I can do very little about it.
All right, volumes will keep surging for the FNO segment, but it's very counterintuitive to know that, whereas your regulators and the FM is concerned, and they are, kind of raising red flags about trading in FNO segment. NSE, on the other hand, has lowered the ticket size of Nifty contracts from 50 to 25 now. And let's look at the market levels, because Nifty is holding, around that 22,250 mark. The broader markets, they continue to outperform both mid cap and the small cap indices. Now they are on a 5-day winning run, and both indices are trading with gains of over half a percent. Nifty mid cap 100 is just trading above the 51,000 mark, whereas the small cap index has taken out 16,500 level. Volatility remains a concern. It is elevated at 20.46, up 0.93% this morning. Remember, just a couple of days back, it slipped from that 20 mark, but again, we are in the times of elections, and the volatility is going to be high. But Mohit, I'll come back to you. Another, one of the reasons that we are seeing this market correction, or at least we saw it in the last couple of weeks, was incessant FII selling. They have, been pretty much net sellers in all of May, pulling out close to $3 billion from the Indian market. But DIIs, on the other hand, has pretty much offsetted all that, all that exodus of foreign moolah, so to say. What's giving the domestic institutional investors this confidence, and where do you see, this pullout from? I mean, what do you think is the reason of this pullout from FII, sir?
Look, I think the FI money, any which ways, is a very, very smart pot of money. In the sense that they have too many options available at hand, and they will always weigh the pros and cons of even a single basis point kind of a differential, which is easily available to them, right? There is no second guessing that Indian markets are expensive today, and to find real good bargain deal or value picks is extremely difficult in the Indian market. Absolutely, there's nothing which is available cheap in the Indian markets today. Right. For an FII investor, if he has some global options available, if the US 10-year yields are elevated as they are today, right, and some of the other markets are looking extremely attractive, then I think it's a matter of where do they think there is more value on the table. And perhaps to my mind, that's the single biggest reason why FIIs have been a little cautious in putting money into Indian markets, honestly. I don't think so. It is to do too much with the election outcome. Perhaps some portion of it plays very heavily on the FII minds. In certain categories, in certain segments, yes, that's true. But I don't think so. That's the single biggest reason for the FII not entering the markets as strongly as the domestic guys are entering. Look, domestic story, as I told you, is a secular story with 15 crore demat accounts and some 4 crore unique investors in mutual funds. I think the story is only just about beginning in India in terms of how the Indians or the retail India is getting into the financial markets. So that story will continue to remain very strong. 20,000 crore of SIP flow a month is massive, Suyash. Honestly, $2.5 billion a month, roughly $30 billion a year, only out of SIP money. It's too huge a pot to be taken lightly on. So my sense is the domestic flows will continue to remain strong. In fact, get stronger by the day. And if you see over the last years, also last few years, the pattern of money, the FII importance in Indian markets have only been decreasing, and that's a good sign for any domestic market. Getting more self-reliant and believe in India is the new theme.
All right. I mean, this FI exodus could be just a tactical shift and perhaps not doesn't have much to do with the elections. Whereas DIIs, they have indicated their strong belief in the inherent strength of Indian economy and Indian markets, and they have been consistent buyers whenever FIs have sold off. But Mohit, before we let you go, you are a registered investment advisor, and I'm sure you get asked this all the time. The markets have corrected. What to buy now, sir?
Look, I'm more of a mutual fund guy than a stock guy, but my sense is I think on the stock front, the banking space looks extremely attractive. If you're betting on Indian economy, you have to bet on the banking space, in both the PSU banking space, the heavyweight banking PSU banking space, and the top private banking space. I think out there perhaps only two names, maybe ICICI and Axis, look attractive as of now. But that's the space to watch out for, looking extremely attractive. And honestly, on the mutual fund side, I would still say that go into the cocoon of large cap, perhaps a Nifty 50 index fund or a Nifty Next 50 index fund is right now one of the best choices to make.
All right, those are the sectoral bets from Mohit. Sir, thank you for giving us time here on Newsline. Always great insights from you.
Thank you.